Hello, everyone. Happy Sunday. Simon is here with AvaTrade, and I want to welcome everyone back to our weekly trading plan webinar. And special welcome to the new people. And for those of you that are new, pretty much the title says it all. And the idea of this and the whole reason why this webinar came up is just for us to prepare ourselves for the upcoming week, to get organized, to have a plan, to analyze things, to mark possible levels for actions, and in general to be more organized and structured, and to avoid chaotic, impulsive trading that doesn't lead to great results. Let's leave it there. So, few things about myself. This is me, Simon Friedman, Senior Account Manager with AvaTrade. I have experience with the markets for over 22 years. I came to trading in June of 2000, and I was doing proprietary trading at a few Wall Street firms for about 11 years. And after that, I moved on to mentor and educate other traders, and currently I'm working with customers at AvaTrade. So there's a few things about my story. And the agenda of the webinar is pretty much the same as always. We'll be talking about indices, some specific stocks, commodities, and Forex. This is the information about our channels, which is a great source of information. You can connect on the Telegram, Twitter, and of course, I always say it, and I keep on saying it, the YouTube is my favorite. It has a lot of videos that are updated daily and edited daily. You have webinars there, you have tutorials, you have tons of educational information and tools that will help you in your trading process. And of course, every time we speak, it's a risk warning that you can find the full statement at avatrade.com. And the idea is very simple. You should take responsibility for your trading, and whatever you get here or any other educational presentations, just for educational purposes only. And it's not a suggestion to trading. And I suggest if you have further questions, you can address the full statement or speak with your account managers. Now, before we go to economic calendar that I have on my screen, I just wanted to show you this picture. And last week we spoke about this event that everybody's waiting for Friday. And this is the title, Fed Chief talks tough on inflation, and this is the picture. So I suggest you can find this article on marketwatch.com. That's where I get it from. And they say funny story that when you enter the park where the event happened, there were signs there that the bears are active and use the sprays and walk with the groups of 3 and so on. So whoever wrote an article, they made some funny remarks there that I'm not going to bring it up here, but just catching the idea of bears are active, it just gives an idea that the market. And if you remember the picture from last week's webinar, when I showed you the one when the bull is unzips himself and the bear coming out in the bull's fair. Anyway, my view of this picture, it's even funnier, I think. This is Powell, and these are the two members, I think. Don't remember their names. I think it says right here, whoever they are, I'm not sure. Anyway, so I think the Powell is just showing them the mountains and say, you see, again, this is my opinion, I'm just trying to make it fun. He said, you see, this was the peak of the market that had no reason to go this high. And then we went lower, and then recently we give hope that we over with the bear market and the bulls came in and we're going lower. And again, in my opinion, just me saying here that it will take a while, if ever, that we reach that peak again. Why am I saying that? I'll just remember this. When I get to the charts, I'll explain why am I saying that, and why the bulls got sucked in, and why the market's going lower, and possibly this is not me speaking, just most of the analysts saying that the market has to see a lower territory than so far we experienced. So I figured I'd just show you this picture, kind of interesting. So big picture, again, the war is still there, unfortunately. I hope that soon I'm going to be saying that it's over, but it's not. We're getting there, though. I think U.S. just signed a bill to helping Ukraine with another, I think, $3 billion that includes weapons and everything else. And Ukraine is really pushing that. Again, I'm not going to go into this politics and criticizing and things, but I hope things will be over soon. So the war is still there, inflation is still there. Recession or not, that's questionable. Some say we are in the recession, some say we're not. Companies reporting not such a great result, and the outlook is even worse. If you remember last week, we spoke about NVIDIA and Dell. Both companies sold out initially, then recovered a little bit, then sold out more on Friday. And Dell said that sales or outlook is really bad. The demand is slowing. The same thing for NVIDIA. 3M, one of the oldest and greatest companies, they're having issues with cash and a lot of things that I didn't find anything great that would make the market go higher. Okay, as of now. That's the big picture. Economic calendar for this week. Okay, the key. I'm going to start from the last one. The key one is non-farm payroll. They're expecting the addition of 290,000 jobs. And again, before I go further, just a reminder: it's not a full report here. What I just take with the high impact, you see in red. And if you take your trading seriously, I suggest that you follow economic calendar. You can filter by the markets that you follow, by the part of the world that you're following, and so on. And here, what I do, I just take the high impact here. So here also included, of course, the unemployment level, and it's expected to stay the same, 3.5. So that's going to be the highlight. Why? Because just to remind you, the Fed in their decision, which comes next September, I think the meeting is September 20th and 21st. They take readings from inflation data and employment data and the economic growth data. So this is a very important one for the next meeting decision. So Monday, we have retail sales from Australia. We have CPI numbers from Germany. On Tuesday, Wednesday, manufacturing, non-manufacturing PMI from China. As we all know, China has been really struggling. We have CPI, this is a European style, the inflation numbers from European Union. We have unemployment change or ADP numbers from the other agency that's reporting. Here they're expecting 200K, 200,000 jobs added. We have GDP numbers from Canada. Retail sales on Thursday from Germany, manufacturing PMI from US on Thursday, and again, Friday, this is the key event. Okay, that's the economic calendar. So let's move to the MT4, the trading platform, and I promise you to show you what I meant by saying, by commenting my personal comments on that mountain picture that they looked at. Powell, take a look. We hit the highs, then we said, okay, this is the bottom. I didn't say it, some I guess did, and they got in. That was March. We made a lower high, then we sold out, and the low here was in June 12th. So from here, they said, okay, again, they say it's the bottom because we reached the previous level of support. They got in again, the bulls come in again, and now we have, they were hoping all this move, they were hoping that the Fed will be less aggressive on increasing the rates, and all this excitement came in. Then the previous week we had a red week, we went lower, and this all move is pretty much happening in one day. This is the daily chart, and you have a drop. Now, I have to admit to you, confess, I usually try to watch, like I did comment on the last speech of Powell. This speech I was not able to watch. I was driving at the time, and so I collected the notes and read a few reports on it. And it says that the speech took 10 minutes as opposed to 30 usual speech, 30 minutes. And basically, what Powell said, and I'm going to quote here, says, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. That's what Powell said. And continue the quote, the unfortunate cost of reducing inflation, but the failure to restore price stability would mean far greater pain. Okay, so the Fed will stay hawkish, hardly good news for the stocks. Okay, and that's the whole outcome of this of the meeting. And basically, he said, and this is nothing new. I guess the market was hoping that things will get a little softer, but the goal of the Fed is, even if it brings recession, even if it brings pain and so on, they really need to bring the prices down. They really need to bring the inflation to 2%. That's their goal, and they will do anything in their power to do so. So this is the thing, and if you want to be ready for that, I'm going to switch now for 30 minutes and take a look at this free fall. Okay, and then 5 minutes, and this is the time of the announcement. This is the initial move, and just to show you, few hours before the symposium, the announcement or the speech of Powell, market actually broke out of the highs of that day on Friday, and it came right back, and that exactly at 2 p.m. GMT, it dived. Then it recovered the next 5 minutes, and from that, on the third 5-minute bar or candle, it just continued going lower, and it closed at the lows. Okay. Now, if you look at the chart here, it's but I didn't answer the question. Sorry, let me just go back and explain. You see, why all this move is overextended. And again, I'm going to bring back FTSE just to give you a comparison. This is FTSE. This is the drop, was a drastic drop on the COVID. This is March 2020. And then all this move just came to recovery to the pre-pandemic. Okay, you see the difference? It was a recovery, but normal recovery to pre-pandemic, or we actually right now FTSE is around pre-pandemic levels. But if you take S&P 500, there's no proportions here. This is the move pre-pandemic, or sorry, when the COVID started, sold out, then we came right back, and we just continue going on this free money like it never ends. And of course, there is an end to everything, and then the Feds started they're tightening policies, and things go lower. So now, what's next in the big picture? The big picture, if you look at this weekly chart, eventually we could come and have a third attempt on this support over here. Now, it's not going to happen overnight, but considering this, if the panic continues, if you can see, we'll take a look at some specific stocks. If the panic continues, we might actually see eventually coming to these levels around 30. Was that 3660 levels. There's a possibility that we're going to visit these levels. Okay, now this is the reality. So the fantasy, it looks like the fantasy is over, and it is also one of the articles says that the market finally gets what Powell is really talking about. So again, we're not going to guess it. This is the beauty of trading. You can take either side. Some traders are going to try even to jump and buy into this sell-off. Always, that the beauty of the market. You always have the buyers and the sellers in every given moment, right? So now let's take day by day. We had a huge drop. We are approaching the 50 moving average here. Okay, as far as the levels, we could continue lower, or we can find some kind of support. Again, over the weekend, a lot of traders, investors, analysts, big and small, they will be really analyzing and making their decisions. So Monday is going to be very interesting. And again, I keep on saying it pretty much every weekend that some traders use this strategy at Thursday, Friday. When the Friday closed, lower than Thursday, it's going to be continuation to the downside, and in the opposite direction. If Friday closes higher than Thursday, then the Monday could be continuation of buying. In this case, of course, it was aggressive selling on Friday due to the event, so we might see Monday continuing the sell-off in equity. So let's just run quickly through the indices. We had Dow Jones pretty much sold about 1,000 points, that's 3%. S&P sold out 3.4%, and Nasdaq 3.9, almost 4%. So this is S&P. So let's just go back to this, and this is Nasdaq, much heavier selling, and Dow Jones also a heavy selling. Now European indices, of course, they followed. DAX had a nice sell-off here. Japanese, sorry, this is FTSE. FTSE had a sell-off, also erased a few previous days. French index swell. Nikkei also had a nice run. If you remember, I mentioned to you that Japanese industry or economy has been recovering nicely, and we're right back below this level of 28,200 on Nikkei. And China, I didn't have the full chance to sell off, but we are facing again this level 13,500 on Chinese index. Let's take a look at our favorite Nifty 50 swell. This is actually very nice. After making a lower high, we come to retest the previous low, the recent low. So if we break through this level around 17,400, we might continue selling off, trying to catch with some of the moving averages on Nifty. Now let's take a look at the specific stocks. Before I go to the big guys, there's actually interesting news. Moderna is suing Pfizer and another company for, they call it, it's a funny word, I'm just trying to find it now, for infringement of the patent on their COVID-19 vaccine. So I don't know how it's going to react, how is it going to affect Pfizer, but technically speaking, we are on the way to a third retest of this level. As you could see it here, March, that's what the move higher started. We came back to retest this level back in June 17, and we're on the way back again. I don't know how big of the effect it will take on Pfizer, but we'll be watching actually this level around 45.5 on what's happening next. Now, if you take a look, all the big stocks, they really, of course, they sold out. Walmart, huge drop to the downside. Disney, Netflix, after this attempt to break through this previous resistance, is selling again. Uber selling. Intel, I spoke with you about Intel, how it really market was going higher. Intel is selling, and pretty much most of the PCs using the Intel processor. So it tells you right away that there's something wrong with the personal computer industry. Now, Apple, also a big sell-off. So I'm not going to go through all of them. All stocks pretty much sold out, including the banks. JP Morgan sell-off, Citibank, Goldman Sachs as well. So again, what's going to be on Monday? It's going to be interesting. It's going to be more publications, more analysts speaking about what happened and trying to make the outlook for the future. We'll start Monday with a fresh week, with a fresh direction maybe. It's going to be interesting to watch. So that's it as far as equity markets. We established that it's a strong pressure to the downside, and possibly Monday will continue in that direction. Now let's move to commodities. And I went through pretty much all the markets, and I realized that equity markets suffered the most from this move on Friday. The rest of the markets, of course, they sold out, but not as strong, and they didn't break the previous levels of support. Okay, and we'll take a look now. We'll start with crude oil. Take a look. Crude oil actually closed in green on Friday. Not much though. It's pretty much neutral day. The open was 92.95 and the close was $93. It's a 5-cent gain. It's pretty much flat for oil. Now, what does it mean? It means that at this level, there's a pressure on both sides. One, there's a possible supply issues if OPEC decides to do what they are planning on doing in case of recession, or in case of Iran starting supplying the markets with oil, and that would happen if the agreement would be signed, which is being discussed. And so that's on the supply. The supply would be shorter. And then on the demand, the economy is not doing great. The market's selling off, China is suffering, and so on. So demand is also shrinking. So that's why you could see we've been struggling around this level, around 93, between 93 and $95. We have a hard time going either higher or lower from these levels. So that's on crude oil. Again, we'll be watching what's happening. And again, just to remind us that the war continues, and Russia being one of the big players in both oil and natural gas, there's a lot of volatility on each event or each news that we receive from the war. Now, natural gas, on that note, we spoke about it last week. It did break to the upside. I think we touched 10 on the 23rd. The high was 10, yeah, 10 exactly. And then we dived again below 940. If you remember, I mentioned to you 940 was the level that we established by this candle here and this one. So we back below 940. And as you could see, the natural gas is holding to these levels. Europe is suffering, struggling, and the winter is coming, and there's a lot of panic from a lot of countries. And European natural gas went up crazy in this week that ended. So let's see what happens. We might go and retest the 10 again. And just to bring the big picture, there's a way to go. If they decide to run it higher, we could go as high as 11, 12, 13, any level. This was back in 2008, before all the global crisis that started in the US, on the market collapse with all the mortgages and securities. So anything can happen. But with us, we're not here to predict the future. We're here to make money. So we'll be watching what's next. If this level will have a hard time to be broken to the upside, then eventually the buyers probably give up, and it's going to be a little sell-off to either this level here at 887 or the 8 even, or the opposite. They can push it higher and start closing above 940 again, and we'll take it higher from there. So that's natural gas. Let's take a look at gold, and that's what I meant by saying that besides the equity markets that reacted really heavily to the downside, other markets didn't. As you could see, gold, yes, it did sell off, but we're still holding this level, the pre-news level or pre-Powell speech level, which the low here was 1727.7. We didn't really touch that level. So if gold continues and retests this level and breaks it, then we'll probably go and retest 1700, which is psychological even number that might happen, or even go breaking below 1700 like we did back in July 20th and 21st. So we have the resistance, clear resistance around 1780. As you could see on Thursday, we tried to break through it, we couldn't. And the next support is 1727.7 or 1728 that we might touch here. So let's draw another line on this level here. So this is our new channel in a way. It's about a $32 channel that the gold is currently sitting in and trying to break out either way. So that's as far as gold. Now, soft commodities, they had added some strength to it. Corn, as you could see, is trying to break out from this previous level of resistance. And as of now, we didn't have a closure about it. So let's see what happens next. And soybeans also trying to break out. And our favorite wheat is sitting in this channel, like I mentioned it every week. It's building up similar to what happened here. Now, it doesn't mean that it's going to shoot up. It could even move higher. Anything could happen. But the fact that we actually monitor and watch this, it means that it's going to have a drastic move because accumulation is big. So if we start, that's what I mention every week pretty much, if we close about 800 again like we did here, and we start building some substantial support here, we might see continuation to the upside, and it could also be an aggressive one. We don't know. And again, for those of you that are new and not so familiar with the fundamentals of wheat, besides all the regular things, the weather and other conditions that affect the soft commodities currently, since the war started on February 24th between Russia and Ukraine, there was a huge global shortage of wheat and corn due to these products being blocked by Russia from being shipped from Ukraine. So it's that knot is being untied slowly, but still the sales or the sales of the products are much lower than they were expected to be if it wasn't for the war. So we're still watching the wheat, and we're still waiting for it to break either up or down. It looks up. We did have 1 day or 2 day move below the low of the channel, then we came straight back into it, and now we're really trying to break to the upside again. So that's as far as wheat. And that's it with soft commodities pretty much. Let's move to the Forex, and we start with dollar index. This is dollar index, and again, on the Powell speech, with all the equity markets selling, and I keep on repeating myself, dollar didn't react as strongly as would be expected. We didn't really come to retest the recent highs, and these are the levels. So when we're here on 14th of July, the high was 109.12, and a few days ago the high was 109.19, higher by 7 cents. And yes, we did move higher. This is the whole move on Feds, but we didn't really break the week's high. As you could see, we closed below the high of the week. So What does it show? It shows, yes, the market reacted to Powell's speech. Yes, it's going to be most likely another 0.75 increase on September 21st. But the market is not showing, especially the currency market or the dollar, in this case, the dollar index doesn't show such a robust move to the upside. Maybe it will do it on Monday. This is the beauty of it, that we can discuss and get prepared. So now we know that about 109, some buyers might come in hoping that finally we're going to break through this resistance. And if you take a look at the monthly chart, we are out of this previous 107.30 here, and now we're in a totally different dimension here, that dollar index can continue higher. So that's on dollar index. And let's take a look at euro. Very interesting. Euro in this past week, it really was traded below the parity, right? As you could see here, this was the 22nd. We closed 0.9937. The next day we went lower but closed higher, and then we had pretty much 4 days in a row the same closing. Okay, let's just look into it. 0.9966, 0.9967, 0.9970, and 0.9964 within 5 pips territory. 4 days in a row. You see volatility increasing, but the closing is the same. And I'll show you something. It's very important to observe things and try to make your own judgment. And I like doing that, and I love sharing that with you. So this is euro. Again, 4 days in a row, the same level closing within 4 or 5 pips, right? Now, dollar got stronger. Euro didn't get weaker here, okay? And it's very, very important. I mean, something's happening. Maybe the big players realize that, yes, we came to parity, yes, we're below $1 now, but maybe it's time to take it higher from here. Could be any, it could be the opposite. They're just holding it and loading to take it lower as well. We don't really know what the big players are doing, but we know that something is happening and they're preparing for the move. All this moves up and down for 4 days, it means somebody's accumulating. Okay, now, next question comes, okay, if euro is holding against the dollar, how is it holding against other currencies? And it's been very strong in the past few days. And let's take a look. Let's take a look all the pairs with euro. Euro Swiss. It's after the recent lows, it's looking higher here, ready to possibly move higher here. Euro yen, very nicely, it's holding here, but it's a tricky one though. Now, Euro GBP is sitting here on the 200 moving average, and take a look on Friday. It moved and erased the previous 3 days to the upside, and almost erased the whole week if it had closed at the highs. Euro Aussie, very nice. Friday we closed above Thursday, which could signal after the double bottom here, we might continue to the upside. What else? Euro NZD, very nicely here. We just established a higher low, and we're on the way to retest the previous resistance. In case we break through it to the upside, we might see continuation to the upside. So as you could see, you analyze the relative strength and the weakness. So we realize the dollar got stronger, but euro is really held. It didn't really sell off against the dollar. So that means that some interest in euro is there, and some buyers are coming in. So something to watch for the upcoming week. All the pairs to do with euro for possible continuation to the upside. Now, pound on the other side is super weak. It's just on the way to make a new low or new recent low, and it doesn't look that great. No buying interest there, as we can see. New Zealand dollar had a nice sell-off on the strength of the dollar. It just tells you there's no relative strength. It's one of the weakest against the dollar. Yen also, we are seeing the weakness of yen continues, and if we break through this range here to this recent high of 137.64, before, we might be on the way to retest these highs that we established back on 14th of July, which is 139.33. Swiss franc, it's similar to euro. Nothing much happening. We're pretty much at the same level for a few days now. So again, we'll be watching if the dollar will continue its strength, and that means that the major currencies would be a nice play against the dollar. And again, this is our indication here, and the next retest is 109.08 on US dollars. The opposite could happen, that we'll go and retest the previous levels of support. It could be anything. It could be a 50 moving average. It could be this level here on 107. Anything. We'll take the day by day. Okay, so that's for as far as currencies. Now, let's take a quick look at Bitcoin. And as we spoke about already, if the dollar gets strong and the market sell off, we spoke about the Bitcoin, it continues to sell off, and we're currently trading around below 20,000, 19,900 on Bitcoin. Now, if we continue being below 20,000, we can easily go and retest the previous levels. This was the level of also 13th of July, and the low was here close to 1900, 1800, 899. So that's another 1,000 lower. As you could see, the buyers are not rushing into saving the Bitcoin here, and Ethereum looks a little bit stronger. We're farther from the recent lows, and we're here to retest, I guess, this level here, 1419. We're currently trading about $50 high, $45 high. So this is the next checkpoint, 1,419 for Ethereum. Okay, so let's summarize it, what we spoke about today. The symposium happened, something that was really important for the investors to know what's going to be the language of Powell, and like I shared with you, they continue being aggressive. Some analysts actually say that yes, it is aggressive, but maybe the more aggressive they are, the sooner they will start actually reducing the interest rate, because the action will bring the results sooner than later. So that's also another opinion there. But nevertheless, we're facing another increase in interest rate, maybe few of them till the end of the year. They'll be monitoring the inflation, of course. They'll be monitoring the employment, which we have NFP numbers this Friday, very, very important. We spoke about equity being really sold out on Friday on that speech, and suffered the most. We had between 3 to 4% fall in major indices, S&P, Dow Jones, and Nasdaq being the weakest. And dollar reacted to it in a positive way, but not so aggressively. So we'll be seeing in the upcoming week what the dollar will do next. Will break to the recent highs or have a hard time, and we'll be acting accordingly with the Forex. Commodities, oil is sitting, trying to figure it out what's more important, supply or demand. Natural gas is being strong as the shortage continues of natural gas in Europe specifically, or especially, and soft commodities gaining some strength. Now, one more thing that I forgot to look into, that's copper. And I did mention the China with the troubles and a little bit of sell-off. And as you take a look here, remember I mentioned to you, if China is doing better and the market is doing better, we might see a breakout to 370. You actually did. And if it wasn't for Powell's speech that really threw eyes on this hotness of the market, I don't know if you could say it that way, the copper would possibly closed above and start moving higher, but it did retrace to the downside. And take a look, that's on the announcement as well. At the same time, it reacted to the downside. So copper is at these levels really trying to fight this 3.7. So again, thank you for everyone for coming and attending the webinars, and I hope that it really helps you and add some practicality to your trading and maybe some structure. I want to wish everyone a great weekend and get some energy, get some excitement for the upcoming week, and have a successful week. Stay happy, stay healthy, stay strong. All the best, and we'll be back next week. Take care.